Welcome everyone who's joined. I'm Nicole and I'll be your host for today's webinar, More Volume, More Revenue, Better Traders, Crypto Derivatives with Shift Markets. We're joined by our excellent speakers from Shift Markets, Ian McAfee, co-founder and CEO, and Michael Zimkind, VP of Business Development. They'll be taking the lead shortly to discuss how crypto derivatives are transforming the market. We truly value your input, so please feel free to ask any questions at any time. You can use the Q&A feature down below or the comment section, and our speakers will do their best to address them during or after the presentation. With that, I'll hand things over to Ian and Michael.
Thanks, Nicole. Welcome, everybody. Thanks for making time today. Today, we will be talking about crypto derivatives. And just to give some background, so Mike and I both came from the FX space, worked at different brokers for a number of years before I started this company in 2009. And we've seen quite a change in retail finance. We've seen the rise in crypto. We got into crypto in 2016 and started with the spot product and helped people set up exchanges there. And a lot of the FX brokers and other brokers, offering derivatives were, I think, reluctant to get into the space with just sort of a unleveraged trading product. Some did and made out very well. But we've seen a pretty big surge in growth in the derivatives volumes in general with the perp format. So the perp format is a little bit different than CFDs. The financing is different, and it's what crypto native traders want to see when they trade crypto derivatives. So we'll talk about that today a little bit. We'll talk about the landscape, give some examples of what we've done, and kind of where we see things going. So with that, move on here. We'll talk about sort of the landscape today. So right now, we see what I see narrowing margins in the FX space with a reliance on volatility in certain products to really make brokers do well. Gold comes up a lot where brokers do a lot of volume and maybe, or they used to do a lot of volume in, say, pound yen or other FX pairs, euro dollar, et cetera. And it's moved more and more towards CFDs where you see most of the action. And margins are kind of slim in terms of it was a race to the bottom. I mean, when I started in FX in 2005, spreads were 3 pips wide, right? Now they're a lot narrower than that. So you're forced to take risks. You're forced to debook. You're to really maximize their yields. And I think crypto kind of solves that problem. So getting us into number 2, what's the point of crypto and finance today? Is it finance? So this probably depends on your age to some extent, but like crypto for people that are on the younger side of things, that's what they think about when they think of finance. Most people who trade or care about finance or have some sort of risk appetite, they participate in crypto. In many cases, that's their primary way they participate in finance and trading. And ignoring this basically cuts you off from that market segment, right? So obviously the FX and CFDs still have a lot of volume and a lot of business, but that's changing. You see the bigger players really focusing on crypto. And what's sort of driving that now is derivatives, right? The biggest names in crypto, the ones who are billionaires and big companies, all of them have been from derivatives, even ones that have failed, right? So even like when you think about the older names that are no longer here, when crypto was having its first sort of false starts, FTX, BitMEX, these were names that they minted billionaires, right? They even though they fell short of delivering a real product and a real broker, and probably the reason why a lot of people were reluctant to get into the space, they made a lot of money. Now it's on the third or fourth pass, right? And we've gone through crypto cycles. Things are more legitimate. There's more people paying attention, and you're seeing the biggest names get into the space. All of them are adding derivatives, right? So the biggest names, Binance, Coinbase, Kraken, every name that's on that scale has recently decided, if not had already been offering perps, and that is a sign, right? The smartest money in the space is focusing on this. So we want to take those lessons, right? We're going to share those lessons with you if you're curious about this topic. How do you do that? What's different about this than just offering CFDs or than offering spot crypto? What or crypto CFDs? What's the difference, right? So we'll talk about that. I'm going to pass it the mic here, just about some of the sales elements and like why, how to think about getting in.
Hello, everybody. So we're going to finish the webinar off talking a little bit about the differences between buying and building a product like ours. From our experience, we've seen how super complicated it is to build trading infrastructure firsthand. It's what we've done for between 7 to 8 years at this point when we jumped, feet first into crypto. The time and energy that you put into just even hiring a developer to come back into a TradFi company from, let's say, a crypto space is very in our experience. We've seen it be very taxing on a company. Some of the best and brightest engineers that want to build cool things can still get hacked. So what we think you should do is start, and when you get into this space, you really want to be properly aligned with what you're actually doing, and we're going to go over that later. The differences between doing it yourself versus using a trusted party that has been through all the rigors and trials and tribulations of building out an infrastructure like this. It should scare you a little bit that if you're not properly equipped, that you're going into battle with a new product, not really knowing what you don't know. So we're going to go over that in a little bit. And then last, we're going to talk more about the shift advantage. We've been doing this for quite some time, as I mentioned. Building out a robust offering and adding the new components and adding in new features that your clients want and your end users want, like the AI tools that's going to help traders trade more, is something that we're constantly evolving, we're constantly building as well. So having just the natural platform and the foundation of what you need in order to get into this business is what we'll go over. But we've already gone through the trials and tribulations over the years. And then the crypto winters, and then the DeFi summers and all of that. So our experiences our tech is not just included just really cool features, but also the experiences that we've gone through.
Thanks, Mike. Yeah. So we touched on this a little bit already. So like what's troubling brokers right now if you're not offering crypto? And you're basically you're waiting for volatility, right? You're waiting for the symbols that you offer to offer the volatility. Now hasn't been so bad with gold hitting all-time highs, but there has been months or long stretches as well where that's not the case, right? So you don't want to be at the mercy of these things. It's competitive, right? They got to pay a lot to get clients, got to pay a lot for IBs. And it's easier, right, when there's a natural excitement about a space. There's not, I wouldn't say a natural excitement about trading Euro dollar or Euro Swiss or Aussie CAD, right? These aren't, if you were to ask a young person or any trader really today, like, is that exciting to you, or is Ethereum, exciting to you? And I think it's very high percentage of people, I think, would say crypto, right? Crypto also offers the 24/7 experience, which FX is close, right, with 24/5, but you retail, right? If you're a retail broker, retail's active on the weekends, right? They don't trade when they work, or some do, but it's nice to have the 24/7 experience, and just the way the world's going. And then I think there's been waves of FX brokers offering very similar products to each other, right? Like they're all, the platform's consolidated to something that doesn't let you distinguish yourself too much, right? If you're an FX broker, like if you're most brokers, you're offering MetaTrader, right? And what real difference is there that you can do, that you can stand out? You don't get a lot of creative freedoms to change yourself, right? You have to focus only on pricing or service or things that that cut margins. There's not really a lot of innovation, and there hasn't been for a long time, and we see that is changing now. And that's why there is this sort of the shift towards crypto. And just we can see that right with the headlines. Mike, you want to cruise through some of these? And
absolutely, yeah. These are just some of the bigger headlines that we want to note over the last 9 months, really in 2025, and they're all monster deals, right? The blending between TradFi and DeFi, it's just all becoming finance at this point, where a lot of these major traditional businesses that started in crypto or are in crypto are gobbling up derivatives traders through acquisitions. And we're not even talking about, the headlines that you see here, I'm not even talking about some of these other deals that go for tens, if not hundreds of millions of dollars that we've seen that don't make major headlines. But in the end, it's these traditional companies coming in and going after like traditional FX traders. My favorite deal here, I would say, is the first one, the Coinbase deal. It's a traditional retail spot exchange buying a derivatives exchange. Deribit is not a 25 or 30-year-old company. Deribit started in 2016, and they got sold for over $3 billion. It's to us, it was a very powerful sign. I think that was in May or June. A very powerful sign that some of these entities are looking at derivatives in a different way, and they're looking at it where if you can't beat them, join them. And there's countless other examples of institutions that are looking to do an M&A, they're looking to partner, they're looking to get into derivatives.
Yeah, so as you guys can see the headlines here, these are billion-dollar deals, right? And they're big names in the space who have very purposely decided to cross asset classes, right? Crypto getting into traditional finance and traditional finance getting into crypto. Let's move on here. So there we go. So who are you up against, right? Who has made some headlines? Who's made some waves? Most of these names weren't really names when a lot of the FX brokers started. So but all of them are bigger than most FX brokers now. And there, eToro came from the FX space, and big win there from compared to his peers. But then startups like these other names have obviously ballooned into, I think both Coinbase and Robinhood are in the S&P 500 now, so some of the largest companies in the world. So it's not it's not just that they've done well; they're the biggest finance companies and one of the most exciting sort of companies in the S&P 500. So pretty interesting there, and this is relatively fresh, right? Or I think Robinhood was added to the S&P 500 within the last few weeks. Coinbase also this year. So this is today, right? This isn't something that happened 10 years ago, 5 years ago, 2 years ago. This is this year these things have happened. So it is, it's time, right? It's nothing says it more than the growth we've seen with these other names.
I'll also mention, Ian, if you want to go back to that slide, we actually, when it comes to some of these names that are on here, we're actually working with a top 3 equities broker that we met at an event in Canada. And the news broke earlier of an acquisition, and they had to immediately seek us out because they felt as if some of these larger institutions were, quote unquote, in their backyard. And they immediately needed to get into a platform or start offering the ability just for, deposit and withdrawals in crypto to compete because they already saw their users asking and inquiring the day that one of their competitors were acquired. So on the theme of this particular slide, brokers not being able to afford to wait, we're seeing that trend even when we go to conferences and seeing these institutions be somewhat scared of what's going on with the bigger fish. Thanks, Ian.
Yeah, no, really good point. I think, yeah, I remember I was with you when that broker came up to us, big equities broker, right? And they very keen. They see some of these names jumping into their backyard, actually by getting involved with one of our clients. So pretty interesting. Yeah. So why is this, right? What's so different about crypto compared to FX? Right? I've heard a lot of opinions about crypto, and we decided early on to stick with it and go through the ups and downs. What I've noticed, and just looking at the conference scene, um, we're going to one next week, Mike and I, in Singapore, and I mean it's probably like 100 times bigger, than most of the other traditional events. It captures so much excitement. It's almost like a religious type following in the finance world. I haven't, we've seen products, right? I've seen the advancement of mobile. We've seen CFDs come into the space and things like that, but nothing really compares to what's happened in the last 5-10 years since crypto. It's getting, so you just have this natural excitement that people are coming in. We've talked about some of it already, like what the 24/7 nature of it, but there's just innovation happening on not just Bitcoin, but the smart contract platforms and just other things like security things are moving to this global system where you can settle electronically, right? And that it's replacing commodities, it's replacing securities, right? Because these tokens can generate income, or they're acting like securities. Regulations haven't really fully caught up with it yet, but people have, right? They've already picked up on all these things, and it just gets the users, right? So I think that's kind of the number one thing is like you want to get more volatility, more user excitement, more dynamic more things happening, and it's a big break from, I'd say, the relatively stagnant nature of the FX space and the MT4 space. I don't know if you have anything on this one, Mike.
Nope, you got it all on that one.
All right. But here's the thing. Traditional brokers still have an edge, and there is, I'd say, the ground game, the regulatory aspect, are things that crypto native companies haven't really fully picked up on. They're there, right? But the history of being able to find these agents that can go out and find customers for you, like IBs, and the laws and like the payment processors and sort of just the general infrastructure. It's been around, it's tested, and the brokers that do have a ground game should use that to their advantage right now, because the crypto retail exchanges that have come from like the Coinbases and Binances of the world, they don't have support, right? You have email support or ticket-based support. There's still a lot of people that don't understand crypto very well, and they rely on a financial services provider, right, to help take them over that chasm. So yeah, I'll pass it to you, Mike, here. I don't know if you have any more on this one.
Yeah, no, I think these are 4 really good points, that the FX brokers do have an edge to get into this market. I think one piece of advice that I would have is to not be scared of new trends, but trends in the sense of just social media in general. I've definitely seen our clients get into this space and then come to us saying, okay, now what now? And not understanding that they have to adapt a little bit more than just going after their existing business their existing IBs and their partners to bring in new blood, right? A lot of new traders now, they want to follow the influencers and the KOLs. And if anyone in this room doesn't know what KOL is, it's a key opinion leader, and they could be just as powerful, if not more powerful, than an introducing broker, because they have access to millions via social media. So I would say these younger audiences are getting pitched by these KOLs and other outlets that are influencing where they go to trade. And if an FX broker getting into derivatives isn't open to it, then you might struggle. But for now, it's taking what you see here, the fact that you have the infrastructure, the fact that you have the IBs, the ability to handle incoming payments, but then also expand on it and be able to scale. You already have that right now. So not being afraid of new ways to bring in new business. And I think, if you were to go to your marketers within your organization, you may find that they're open to it and they want to do it and they want to learn more about it. So I just want to, key point here is don't be afraid of new ways of bringing new business. Back to you, Ian.
Yeah, no, solid point there. Let's move on here. So just what are the numbers, right? What are we talking about here? And I mean, you can sort of see this, but there's the growth is just, if everywhere you look with any metric, whether it be volume, deposits, users, ownership percentages, trades, I mean, everything is going up. So we have some here, but I think it's not a surprise to anyone either. Pretty much anywhere you look at any data set you find, probably one of the reasons you're listening to this webinar is because you've seen these things, right? You want to know how to take advantage of it. So we won't bore you with all the minutia of the numbers, but here's a few. But I think a lot of you guys probably already know this. I think the one that may not be super obvious is just the amount that's just derivatives, right? That is one thing it's always been something. Early crypto years wasn't a lot of players offering it, but now all the bigger names have just recently started, and you're seeing a massive spike in volumes here. And like you're talking about, top 10, 20 derivatives exchanges. They're doing many yards a day, right? So, and it's one, okay, great. Like, so some of the FX brokers do that. But I'm talking about the top 20, 30, right? And but the other thing there is the spreads are much wider. So the fees, commissions, the all-in costs to trade from the retail customer paying the broker are multiples of what they would be in FX. So every yard that you do in crypto perps, you might be doing 10, 20 yards in FX. So that's where it's like in terms of revenue, right? And so that's where things I think really starting to open up. Mike, I don't know if you have any thoughts here, but
absolutely. So I think it's worth noting that every exchange that we've built and onboarded have offered derivatives after offering spot. There's no exchange out there that we know of that's on our tech stack that is just a spot exchange. And to Ian's point, you're not going to find any successful operation that's purely just a spot offering. Now maybe due to regulatory concerns and constraints, some of these operations can't offer perpetuals, but they find a way, right? Like it's the old FX way where you go offshore and you go to a jurisdiction that does allow for leverage trading and perpetual futures. So what I would add here is that it is a tremendous revenue builder, booster for adding perps, and we've seen it from our clients.
Thanks, Mike. Yeah, so we've highlighted a couple of the bigger names. I'm guessing most of you know these names, but we did some homework here, and I think the thing that jumps out, at least to me, is when these companies started, right? So Bybit, you're talking about, the last 8 years or so, has become a company that can shrug off, well, not quite shrug off, but basically take $1 billion hack, right? And kind of just move on as if, things are normal. And they did, to their credit. Now, yeah, there's a lot of lessons learned there, but they're still around. Their customers have their money, right? So that's a big thing to say, right? If you think about, I remember the biggest brokers during the Swiss National Bank event, had a fraction of that, and then they didn't survive, and at least not in the same way, right? So this is bigger, much bigger, and Bybit's still around, and they're not the biggest, right? So they're among. I think we talked about Deribit, but sold for billions of dollars to Coinbase, and another name here, OKX. So, and yeah, we didn't mention Binance here, but these are these are companies that are now among the biggest companies in the world. So, and this is all relatively new, and I think that's my biggest takeaway here, when you're thinking about why should I be doing this, right? The peers are huge, and that's a reason to be a little bit afraid. But at the same time, that it was the same thing in FX. You had a couple companies start off and had most of the market share, and over time, people chipped away, and now second generation, third generation FX brokers, ones that started 2010 instead of 2000, right? They're some of the biggest ones now. And so there's no reason, even though they were, 10 years later. So there's no reason that can't happen today with crypto, and it will. There's going to be names 5 years from now that you probably haven't heard of, and I haven't either, that might be in the same realm as these guys. I'll pass it to you, Mike. I know you have a few thoughts.
Yeah, no, you hit all the major points there. I think it's worth noting that Bybit started 7 years ago. I mean, again, not a company that started 20 years ago. OKX was 2013, so okay, that one is a little bit over a decade. And Deribit, like I mentioned earlier, started in 2016. For the most part, I think all the brain trust of all three companies are billionaires or close to being billionaires at this point. And like Ian mentioned, like they shrugged off a $1 billion hack in about 2 months. And I think I know it's from doing 20 to 40 yards a day, charging 2 to 5 basis points. You can do that in 2 months, in the case of Bybit. So pretty impressive where they are. And I would also mention that if you did, look back, Bybit for sure, those guys come from the same space that most of us in this room do come from in FX. But there's also smaller, names and exchanges that we know that we work with. They're pumping out 5 to 10 yards a day in derivatives volume. And they only started a few years ago. I mean, some of them started 2 or 3 years ago. Then there's dozens of these exchanges that they don't have like a unique model. They have a good marketing plan, and it's worth noting that they came in listening to what the market wanted, and the market, and going after the right users to get them onboarded, and using that the social media tools that they have, and offering the products and services that get clients onboarded very quickly. And to me, it's not rocket science what they did. They just did it very, very well, and they came at the right time. But it's not too late, because we're seeing dozens of these exchanges that are popping up out of the blue that are doing 5 to 10 yards a day, which is much better than an average FX broker. So cool use cases here, and happy to give more use cases if anybody wants to contact me afterwards, and we could talk about other clients as well.
Great points. I think we're seeing these startups, right? We're seeing people come to us and they're excited about what we're talking about and getting started. Both big names and startups. So it really, I think, regardless of how big you are, I think there's ample opportunity to step into the space. So yeah, I think we talked about this, the takeaways, but basically the things that are driving this are the derivatives. And we say derivatives, but it's not it's not just CFDs or options, or it's perps, right? Perpetual futures. That matters because this is what the public wants. And just like there's standards in FX, right? Just like it's hard to get your users, your traders, to switch platforms. It's hard to get them to buy into new customs or paradigms, right? If you were a new FX broker and started listing things differently, let's say you changed the way swaps work, not 5 o'clock New York anymore. Let's say you made a different time. Let's say you listed dollar yen, yen dollar. That's what, when a crypto trader looks at crypto CFDs, that's what they see. And I think that's the biggest gap that we need to explain to brokers, is that you need to offer the product in a way that feels native. If you look like someone from 8 years ago, which is what a lot of brokers are doing right now, they're not seeing the volumes that you see in perps. We get a lot of our rebuttals are to get in are like, well, I already have crypto. And the answer is no, you don't. You don't. You have a CFD product with a few symbols, but you don't really offer crypto, not according to the trader. And the data echoes that, right? It's not the CFD volumes that are growing; it's the perp volumes that are growing by leaps and bounds. It's not even close. And we can talk to anyone more about that, but that's, I think, one key point. Another key point I'll make here is you're already doing crypto with deposits, right? Your customers are sending you crypto and they're buying it from your competitors right now. So when we talk about Binance, just as an example, your user goes and buys their stablecoin over there, and then they send it to you. And if you're targeting a big market, let's say Southeast Asia or Asia in general, a large percentage of your deposits come from stablecoins. And who gets all that data? Who gets those users, right? It's going to be the crypto exchanges first before they get it to you. And now they're targeting those people. They have their wallet addresses. They have their names. They have everything. Why would a crypto trader who maybe they used to trade FX, they're starting to buy stable coins, and now they see a platform that offers a product that competes with your product. So if you're doing this, you're sending customers to these names that we've been talking about, which is dangerous, right? if you think about it, it's like the worst thing you can do. You're giving your customers away to a direct competitor. I don't know, Mike, if you have more points here.
Nope, nailed that one.
Alrighty. I'll let you jump on this one if
Sure.
you want to take this one. Yeah,
absolutely. Yeah, I think the next couple slides is specifically about Shift and our platform. So we'll switch gears a little bit. But in this case, in this slide, you'll see here that it's the difference, but like we're trying to explain the difference between building out your own infrastructure and your own tech versus buying a white label product. You could see it here, like to build something, it's going to take you 12 to 18 months. It's going to cost you $500,000 to $1 million. There's ongoing operational headaches. Requires a crypto native engineering talent, which is scarce, could be expensive. The downtime, the hacks, compliance features, those are the things that you're going to start to worry about. With the buy, so the Shift product, a white label product, it's proven. There's rapid time to market. And again, the time and energy that you would have to build it out yourself versus using a system, again, gets you to market faster with what we have to offer. And you could read the other points here. One thing I kind of like to point out that I've seen from clients, I have a couple cases. One case is an Indonesian-based exchange that, they built out the tech, took them 2 years. They didn't like the tech. They were very concerned about security with just the nature of blockchain in general. They didn't feel comfortable even taking on deposits. They heard about us, they found us, and now they're at the market or in the market right now, worried about client acquisition rather than making sure that their tech works and that clients can actually place trade and they have a good experience. We also have another client that, they wish that they spent the hundreds of thousands of dollars that they did to build out their own tech, which is useless, on marketing, right? Again, going back to the social media aspect of it, it could be quite expensive if you don't have a budget, where instead of worrying about the tech and problems, you're worrying about, again, client acquisition here. So the idea here is using a proven infrastructure will get you to market faster. It will alleviate a lot of your headaches. And you could also use and promote the idea that the security and the compliance is already built into a system like Shifts, where you can promote that as a marketing ploy as well, so your clients can feel safe. And we can move on. Unless you have anything else, Ian?
No, that's great. I think just to highlight one point there is you have to trust somebody, right? And it's good to trust your employees. And the thing is, it's hard to do. So we're audited, right? We have to go through and we have logs about who has access. And there's a whole list of things that need to be done that if you're going to do it internally, you need to basically copy, right? Which is not something FX brokers have ever had to do before, with the level of access that a developer might have, or even like a DevOps or cloud engineer. They could basically take down the whole system. And remember, the money's all there, right? So it's a different ball game. You need to really think hard about, it's one thing to trust another company, right? But if that company is audited and has been around for 15, 20 years, it's different than getting a bunch of employees that you have to really be very careful, or they could make a lot of money by implanting a few different things. So and it happens. We've seen it, and this is why people come over to us, and just something to be mindful of. But Mike highlighted all the other really good points here. Move on to a little bit about us. Mike, if you want to grab that one.
Sure. I mean, you see our stats here. Really, the highlight here is that we were born into finance through FX. Like, our executive team comes from FX. I think we have about 150 years of FX experience before we even got into crypto 7-8 years ago. Myself, I worked for a large retail broker for 12 years. And at this point, I think we have just as much experience in crypto. So we know how to speak the language to FX brokers. We know how we know all the trials and tribulations. We've been, like I mentioned earlier, we've been through every crypto winter and DeFi summer. We've seen the swings in the crypto market, and they were just as violent and earth-shattering as far as like companies dissolving as any FX event and the Black Swan events and everything that we've seen in FX in the past. So why trust Shift? This is a fine slide, but really what it comes down to is it's not just the technology that we're offering. We're offering our experience. There is a level of consulting that we love to hate. But when somebody's diving into this market, it's not simply adding another asset to, a MetaTrader. What it really is getting into a new market and understanding the lingo. And as Ian mentioned, like the event, like just the events that we go to and attend on the crypto side are just so massive as far as the amount of people there and opportunities and what they're building. It's a lot different feel. And with the Shift advantage, it's the idea that we've been through all of that, and we can share our experiences for anyone that wants to work with us. Yeah, and then again, another advantage with us, you see again more stats here as far as our tech is concerned. I think what's been interesting and what's happened over the last 12 to 18 months with our particular platform is we've gone multi-asset. So you're able to go multi-asset and use cross-margin capabilities as well for your trading. And what our clients are looking at and they're saying is, hey, if it's a multi-asset platform and not just a crypto exchange offering spot and perps, can I replace my existing platform completely? And that was kind of an effect that we didn't expect, but we're seeing it now. So, we're used to all the standard platforms that are out there, and we know them. We've worked with them. Again, we've been in FX for 25 years, some of us. So we know the platforms that are out there and they're most widely used. But our platform has the effect that it can be a replaceable infrastructure for someone that is looking to, get off of existing old tech. But yeah, exchanges can absolutely use our tech for that.
We covered a few of these things, but what do you get, right? Why do this? I think it's, look, you want more revenue. It's pretty straightforward. You want more clients, and if you want to do it quickly and confidently, I think we're offering that as an option to people that want to do that, right? With our product. Our product and our service is really designed for this exact thing, is helping financial institutions get into crypto. It's not just, to Mike's point, just a platform, right? We've helped, we understand the space. We also understand the FX space. And I think just speaking both languages, so to speak, and making it all the things that you're used to, if you're coming from the FX world, right? Then helping that translate over to what are the real differences, right? And maybe you've tried it a little here and there. Maybe you accept crypto deposits. Maybe you have crypto CFDs. But how do you really turn the corner, right, and get these volumes that we're talking about, like if they're invisible to you right now? I think that's really the real conversation, right? How do you tap into that perps growth? And that's what you're getting with us, right? Is the ability to do that. I think we're getting a little tighter on time here, but we're almost done. So yeah, looking forward, what's next, right? I think we think that crypto will become the primary trading asset. We think, and crypto, that word will go away, and finance will just be crypto, right? It's no longer just crypto. It's finance is crypto, right? Everything's crypto. And they might not say it the same way, but it'd be digital assets, right? But we're already seeing things get tokenized, right? And really what our platform does, it's a digital asset platform, right? So if you want to bring these real world assets onto a digital asset platform, that's the new way things are getting done, right? And we're seeing it. We're seeing real estate. We're seeing money market funds. We're seeing tokenized commodities. We're seeing securities. Everything will be traded this way. Even privately owned companies are being tokenized, like your SpaceX and things that you don't have access to in public markets. So these are really cool concepts, right? And this is just basically what we think is going to happen, is that you can trade really anything, right? With this technology, you can trade it anywhere, and you can settle everywhere. You can trade peer to peer. You can trade. I can settle with Mike now with crypto, right? I don't need to go through many layers of banks and brokers and settlement and all these different things. Crypto settles, and that's how the technology works. So we think that all of finance will basically move over to this paradigm. But we're also looking at really cool things. Mike mentioned AI. We're looking at automation and how do you get into trades, and that's going to be on our platform as well. And how do you find influencers? How do you find things? So we're making it not just a way to trade, but also an experience that the retail customers will like, but also the brokers can easily manage. We have that back office capabilities to do that as well. I know we have some questions. Mike, I'll let you take the last word here on the presentation if you have anything else before the questions.
No, I think we nailed it in the end. I think, the idea here was to kind of just talk a little bit about Shift's product and about what FX brokers, what the opportunities that they have to get into this space, to offer derivatives, and like Ian mentioned, to make more revenue. You have the infrastructure already to handle 10x more clients to come in, to go after the newer generation, to come into your ecosystem, and even to use crypto as a form to deposit, let's say, stable coins to fund your core business, your FX business. We've seen a lot of success where brokers want to dip their toes into the market, they can use infrastructure that we already have or modules that we've already built out for just payments so that their clients can just use their existing crypto to fund their FX trading accounts. One thing worth leaving is worth ending here is you don't need to rely on your clients going to your competitors like your Binances and your OKXs to buy the crypto to then get their stable coins and then fund their FX accounts with you as a broker. So all that infrastructure can be built in, and we already have a lot of those modules for you guys. So I think in the end, hopefully you guys learned a little bit more about our offering, about what we think the market, where we think the market is going, what we've seen so far. And we're also happy to, talk offline with anybody here. Both Ian and myself are available at any time to talk shop, to talk about our products and talk about the market in general. So I guess maybe we can hand it over to you, Nicole.
Yes, thank you. We actually have a question from one of the viewers. It says, I'm representing a gold-backed token looking to enter the market. Where should I apply for authority as a broker?
We were talking about this a little bit, but things are getting tokenized now. We're happy to talk to you, of course. Our platform is on it's global, right? We have many different countries and operators that use our platform, so we can be a distribution channel for people that are tokenizing different things. I think your question is that's from the technology standpoint, right? How do you get your token out there? There's also legal questions, right, around that. So that depends on your jurisdiction and how you want to do that. We actually, with our clients too, we do have a compliance and in-house legal team that we share advice with. This is for these types of things. We have basically lawyers that will talk to you about these issues. So happy to kind of steer you that direction, but we need to know a little bit more, right, before we give you like a play-by-play. But it's a good time to do what you're talking about. People love gold. People, it's the number one asset on many platforms right now. So yeah, feel free to reach out to us. But I think just you want to be on a platform, right, and you want the legal side of things wrapped up. And once you have those two things, it's really just about getting your name out there.
Great. Thank you, Ian. For brokers who are new to crypto, what's the easiest way to start offering derivatives without taking on too much risk?
Well, there's different types of risk, right? I think there's operational risk, there's market risk. I think, from the market risk perspective, you can go kind of crazy with different meme coins and stuff. I think what I would recommend is sticking with the majors. That's where you're going to get most of the volume. From a marketing perspective, it's good to have as much as you can, but I think the bigger risk is really the operational hazards that come with like getting into digital assets. And Mike was touching on that a lot earlier. Just how do you do it, right? Do you want to try to find a team that has experience with on-chain and build out these things yourself? Might take a couple of years and oftentimes come with some pitfalls, landmines. Obviously I'm biased, but we have a platform that makes it very easy to do that. And a lot of brokers are choosing that option. So Mike, I don't know if you have any more there, but
No, nailed it. I think it's just making sure that you're thinking ahead and you're using experience from other infrastructure providers, as well as what has not worked in the past. But finding a technology vendor like a Shift that can do all of that is helpful, and making sure that the boxes are checked. If you're new to the space, make sure that you're not just buying a piece of tech without having a conversation and asking the right questions to make you fully understand of what you need to do operationally and security wise for your end users. Because it's not simply just throwing out a platform, having the FX client funding an account through a PSP that everybody else knows. So or check. It's more making sure that firsthand that other entities and institutions are utilizing the tech and being cognizant of all of that.
Great. Thank you. We'll do one more. How can adding crypto derivatives impact my bottom line and client engagement as a broker?
Well, can add a lot to your bottom line. It's it is growing very quickly, and the all-in revenue per trade is much higher. The yields are just a lot higher. The users are easier to find, and there's new cool things that are getting tokenized, right? So you can pick up on one of these changes and focus on that. Mike, if you want to add to that?
Yeah, I think we went over a lot of it today. Adding derivatives has helped some of the bigger exchanges that you guys have heard of and some of the ones that you haven't heard of. Having a spot offering is one thing, but offering leverage trading is what, again, every FX broker is used to. Leverage trading is everybody's bread and butter, and perps is the way that the younger generation trades. And if you don't have it, somebody else is going to offer it, similar to, the idea that a lot of the FX brokers have the same platform. If you don't have the products and services that they want, the users are going to click 3 buttons, then they're going to move to a new entity. So, it should be a warning for anyone that if you don't have all the products and services or the majority of them, not just offering spot crypto, but offering a perps offering, you may lose out. Some of these other competitors that we mentioned earlier on are coming for you. Don't want to scare you to end this presentation here, but at the same time, like, we're big proponents, and we've seen perpetual futures and derivatives trading in general just really increase the bottom line for every broker that already has the infrastructure set up.
Great, thank you. We'll do just one last one from the Q&A section. It's evident, like you said, that finance and crypto converges. However, how do you see this playing out in centralized vs decentralized venue? And can we expect a lot of flow move to DeFi eventually, which have a different infrastructure and market structure?
Yeah, so both of those, I think, are growing. You still have most, by a significant amount, on CeFi, right? But DeFi is also growing. We, as a technology company, look at both. Our recommendation is to start, if you're coming from a centralized, regulated financial institution, you're going to understand the CeFi a lot faster. And a lot of the, I think the day-to-day is going to be very similar to running how you run an FX broker. DeFi opens the door to other things, and it's a big and growing market. It's still it's still hard for a lot of people to get to access with all of the wallet pop-ups and configurations and things that are sort of unique to DeFi. It is exciting though. I use it myself, and I'm very curious about the next few steps that it's taking. But those are both paths for you, honestly. I think what we're presenting is, how do you start with a CeFi offering, largely because that's going to be most similar to what a lot of FX brokers or other crypto exchanges have already done, and also where most of the volume is right now. But we think that's going to change also. So where we have plans and with Web3 and how to do that as well. So you will we will kind of go with where the trading volumes are. But I think it's a really good question, and I think both of those are growing fast.
Great, thank you, Ian. I think we're covered for this session. Of course, if any of the participants have any other questions, they can reach out directly. You could also revisit and rewatch the webinar. We'll be posting it on our YouTube channel. We'll send a reminder on your email address as well, with both the YouTube link and the presentation. Thank you, Ian and Michael, for your time today.
Thank you so much.
Thanks, Nicole. Yeah, special thanks to you and Finance Magnates. So appreciate it.
Thank you for joining. We'll see you in the next webinar.